I just took this trade. And if this trade does hit take profit right there, I'm going to pass my phase 2 of the evaluation. Now, in a little bit, I also want to talk about how I approach arguably the last trade before passing an evaluation. Before we do that, let's actually start breaking down this trade right here and the reason why I took it. So if we first, of course, this all starts on the higher time frame. Now, on the higher time frame, we see the first thing I want to establish is just my overall higher time frame bias. Now, on ES, that's quite easy, arguably, because what is the overall higher time frame bias? This has simply been bullish. It has been continuing higher. And what we see then is that we retrace back into a weekly fair value gap right there. That's all right, but for me, it's more important right here what was preventing us from continuing higher. And what was preventing us is that we were still rejecting with these large wicks right there. So when I saw that to me is simply waiting. And once we start running this high, I knew that was my parameter to now look to potentially get involved. So what we currently see is that we have this fair value gap. Now that fair value gap doesn't really scare me, of course. That fair value gap right there can cause a rejection, but to me, it's more a bump in the road resistance. A bump in the road resistance is quite a difference between that, because a bump in the road resistance does not determine the bias, if that makes sense. So if we go into the lower time frame right here, then we see we're also arguably running this high right there. We already got the rejection previously as well from the fair value gap, the resistance that we have towards the left. So at this moment in time, once we start running this high again right there, so we start creating this expansion candle above it again. For me, that is the entry. That is then where I would like to get involved. My stop loss goes below the most recent fair value area. Now, right here, what we see is that I'm targeting a 1 to 2 RR. That is arguably very close right there towards the all-time high. So my stop loss is not exactly at the lows. It is a little bit refined right there towards the area. Again, if we get a retracement, the first we can ideally retrace is towards this fair value gap still right there. If that still happens, wouldn't really surprise me. And then we can still potentially continue higher from that. But a deeper retracement than that, I don't expect that to happen. So what should happen in order for price to remain high probability, it shouldn't have these deep retracements to then continue higher. It could happen, but then I want to be out of the trade because it's not high probability anymore. So your stop loss is always going to be on the edge, essentially the boundary where price is going to go from high probability to now low probability. And before we dive in how I approach the last trades of an evaluation before potentially getting live funded, I also want to dive into NASDAQ a little bit right here, because NASDAQ actually was my preferred instrument to trade. And the reason why is because NASDAQ, simply said, is a little bit stronger. So it's more likely to reach the all-time high faster right there. But if I was to take a trade right here on NASDAQ, and I was to, for example, look at this entry right there, cover, let's say, the same fair value area, then you'll see my 1 to 2 RR sticks out at the top right there. As in, it's not directly at the all-time high. So we would need to run the all-time high in order to actually hit my take profit. For me, that makes it a little bit lower probability. Then I prefer ES right there, because my take profit can actually be within the all-time high. And then either I had to sacrifice a whole lot of my stop loss right there, which I'm not necessarily the biggest fan of, because then my stop loss becomes more so random. So that's why I chose ES. And the interesting part right here is the all-time high. And the reason why is because even if we are going to continue lower, we oftentimes still need to continue higher in order to be able to continue lower. So the way that works is purely liquidity. So right here, the probability is very high that we are going to reach the all-time high. And the reason why that is also because of liquidity purposes. So of course, yes, could we consolidate right here? Yeah, could definitely happen. Could we continue lower? Yes. But what is likely to happen is that even if we want to drop off heavily right there and we want to continue lower, then we're going to need to trap people. We're going to need to build liquidity right there at the all-time high, trap people into this market right there to then reverse it. So if we are going to continue higher above the all-time high, well, then of course we are going to keep continuing higher right there. So that's one option. We also have the option that we are going to continue lower. If we are going to continue lower, it's not likely to happen like this. It's likely that we are going to sweep the all-time high to then continue lower. Now, the only thing right here that I'm not necessarily a big fan of is the time that I took the trade. So you'll notice it's 5:42 right there AM New York local time. So this is before market open, so before equities open, where at 9:30 you're going to have equities open, a lot of volatility coming into the market. So that is something that does worry me a tiny bit. As in, equities open could do something like this to then still continue higher, because that volatility is like a major news event almost. I already passed phase 1. I'm very close to passing phase 2, but I think it's very important to understand when you start to get to the last trades of your phase 1 or phase 2, where you know, okay, I'm now within reach of passing this evaluation. That is arguably where your mental side is going to get tested the most. Imagine you're so close to passing that challenge and you almost think, oh, I can just place buy or sell on any trade and just get it over with, right? And that is arguably the worst thing that you can do. You really, really, really want to stick to that process, to your trading plan to finish the evaluation. Because imagine if the trade does lose and then you're now out of this process and then you are going to take some huge psychology hits as well. Now, what is important to understand is the risk management. So on these last trades, again, this trade might not play out right here. But if it doesn't play out, I only lose around 0.45%. So that means I'm going to have enough shots right here to eventually pass the evaluation. If it doesn't happen on this trade, it might happen on the next one or the next few. All right, let's see what this trade has in store for us. And in the meantime, I'm going to do something else. Here's the outcome of the trade ID, and you can see right here that the trade ended up hitting take profit right there. And to also show you that I actually did take the trade right there on my MetaTrader right here. That is where I took the trade, where you'll see the arrows. Let's first dive into what exactly happened with the trade and importance, for example, what you'll see already of your stop loss right there being in the right place. Now, after that, we're going to immediately dive into all the ins and outs, how you can pass your own evaluation and what is needed to achieve that. Now, the trade is all fun and games, but I want to take you with me through the actual evaluation right here and how you can also start passing your own evaluations, because there's a few key things that you should absolutely pay attention to. So it's actually a funny thing, because right here behind me, I have my absolute first ever FTMO challenge that I passed right here. And I still have, of course, I still have that data from the first challenge that I passed right here, which is what you're currently seeing. Now, what you'll already notice, if you compare this to what we are currently looking at to this phase 2, look how much more polished my current trading is. And quite frankly, if we go to the challenge that I passed in 2021, I had no idea what I was doing. I had no clue. Now, this is very funny, because this is the stereotype of what makes a losing trader. Losing traders tend to trade a lot throughout the day. So think of 8 trades per day. Here, I was in the exact same boat. As in, I took, what is that? 9 times 8 is 72. I took 68 trades in 9 days. So very, very close to the average. And there's one core reason as to why this is happening. Is because I have no clue at that moment in time what I'm doing. I have no clear trading plan. I don't know what I'm waiting for. So over the years, and in 2023, I already started trading for investors. One of the first things that I had to figure out was knowing exactly when and where I look to buy and look to sell. Now, once you start understanding that, then your equity curve is going to look a little bit more like this, where it says it took me 5 trades. These are actually 4 trades right here that it took me to pass the phase 2 of an evaluation. Now, there's some important metrics right here. So for example, the consistency score, by the way, well, this doesn't make a whole lot of sense. Maybe it's based on risk management, etc. But I can confidently tell you that this was a lot more consistent in the types of trades that I'm taking than this, even though the consistency score here is seemingly higher. Maybe in this old challenge, I was just consistently bad, which I guess is still a form of consistency. So if we first take a look at the old challenge right here, something I want you to pay attention to is the Sharpe ratio right there. The Sharpe ratio is 0.45, which is low, which is not necessarily a good thing. So if we go, for example, to the challenge that I just passed, you'll notice the Sharpe ratio is triple that amount. It's 1.27 right there. Now, Sharpe ratio is very important to understand. Sharpe ratio essentially tells you how volatile your equity curve is. So for example, if we take a look at this challenge right here, this green line, that's my equity curve. You'll notice my equity curve is very volatile. So what goes up fast comes down very fast as well. Whereas with the new challenge right here, this is not not that volatile. That is also something we're going to dive into because that really comes down to simply set your risk management. Now, one important thing to also understand is that at this moment in time, we're going to break down phase 2 right here of an evaluation. This was phase 1. Phase 1, a lot of times what I notice as well is that you can get away with messing around and potentially not knowing exactly what your process or your trading plan is. But in phase 2, or eventually, you're simply going to get exposed. So that's why oftentimes phase 2 actually tends to be the more difficult phase because of the fact that most people don't have a clear process, but also because of the fact that there's a lot of emotions attached now. So phase 2, there's a lot more pressure there. And especially if you now have in your mind, which I did have when I passed this in 2021, I did have, this is going to change my life. This is going to buy me a whole lot of nice things. So then when you lose that phase 2 or even the funded accounts, you didn't just lose the account, you lost everything that came attached with it. So you lost the nice watch, you lost the new monitor, the new PC. But that's where you really need to shift your mindset. You want to go from outcome orientated to process orientated. And you can only consistently stick to your process if you even know what your process is in the first place. And that's where I want to dive into a little bit of the trades right here. Start paying attention right here to the similarities of all these trades. Now, I'm going to briefly go over it. So what we see right here is that we have a clear all-time high right there to target on gold. And I simply want to look for a reason to buy. Now, the reason for buy right here was as soon as we overtake this daily bearish fair value gap and we start running the rejection highs right there. So on the 1 hour, that eventually right there with these expansion candles became an entry. Notice again, my stop loss is also very similar. It's below the fair value area and below the fair value gap that we have right there. And that's where we retrace back into to then continue higher and reach my take profit 1 to 2 RR. The second trade I took was on crude oil, which was actually a break even right here. So we also had quite a clear target, which was that high initially right there. Now what we see right here is that we were already continuing higher as well. So on the 4 hour and on the 1 hour, we had these expansion candles and we overtook, more importantly, and disrespected these bearish fair value gaps right there, where we now had a clear path to continue higher towards the next target right there, which we did eventually reach, but I closed this before the weekend. So I closed this on a Friday right there. We were struggling a whole lot. Eventually, if I held the trades again, I would have likely hit take profit right there as well. But that's after the fact. I just have to gather data on if I should even go break even in the first place or not. After the crude oil trade, I took a trade right here on NASDAQ, where we also have a very clear target in the form of that high. And we have a very clear target in the form of also an all-time high. So what we saw on NASDAQ right here is that we overtook this fair value gap right there. We start running the rejection high right there, which clears up the path to now continue higher towards first this target. And then afterwards, again, it's sort of a dominoes effect where the first resistance gets overtaken, then the next one, and the next one. So what we see right here is that the only thing that we really struggled with is, okay, can we retrace back into this daily fair value gap? So what we saw right here is that we were already continuing higher. So there was already intention to continue higher. We start respecting these 4 hour fair value gaps, for example. So on the 15 minutes, eventually, again, my entry was on expansion phase candle right there, which right now is a long wick. Yes, whilst I was entering, it was an expansion candle. That's how I like to enter. My stop loss, very similar, a little bit more tricky at this moment in time, goes below the recent fair value area right there and the fair value gaps, where you would really have to go into the 5 minutes to more accurately see that as well, which eventually hit my take profit right there as well. So that essentially puts me up 4 RR in total, where I only need, in theory, 1 trade right there to pass the challenge. And that trade, with that hitting take profit, that put me over the finish line, and that put me over 5% profit in total, which I needed to pass phase 2. So in total of the 4 trades, there were 3 winning trades. 3 of those winning trades were trading towards an all-time high. That's already the first thing that you can notice. And then notice all of these trades have to do with somewhat of resistance towards the left. So for me, I can clearly say right now, but I need a whole lot of videos to fully explain what that actually means, is my trading plan is waiting for one-sided arguments. And once we have one-sided arguments, I use an expansion candle to enter. That's it. But again, when picking the right instruments to then trade, which ones are the highest probability There's a lot more nuance to that. And the way I like to see that is I'm very clear on what I'm trading. I have 100% clarity, which means that I have 100% this confidence in me. It's exactly like going to a job and knowing exactly what is expected from you and just performing the task. I know my exact process, and I know if I stick to my process, there is arguably no chance or very little chance, unless I start messing up in my psychology, that I'm actually going to blow that account or I'm not going to pass the challenge. But you can't get so confident in a process if you don't even know what your process is in the first place. Now, once you pass a phase 2, I think it's very important to already know what is expected from you. So you don't go into a live funded account right now with no expectations on what you should do. Again, the first expectation is, of course, you stick to the same process over and over. But what is important to understand is that when you get to your funded, your live account, essentially, where you can now get a payout, the first goal is, if the opportunity is there, and with FTMO in this case, there is, you need to get the refund of the fee that you actually paid. I need to emphasize as well that this is a marathon, so we're in here for the long term. So I've seen it firsthand, actually, with the prop firm that I used to own. We had someone who very fast actually got to a payout stage, so got to a live account. And that person was also on a 100K account. And I believe that person had 8,000 in profit. And all that person had to do was nothing, was just simply sit there and wait to get the first payout, to then reinvest that potentially in another challenge and start scaling that capital, right? What did the person do? To no one's surprise, well, that person decided to, well, let me just trade a little bit more, blowing the full 8,000. Even eventually, after a couple of days, making it so bad, blowing the full account. So not only have you just screwed up 8,000 in profit, you also lost the full challenge fee, you lost everything. Now, the reason why this was is because the risk management was just bad. That's it. There was no secret. There was just bad risk management, and eventually the process, which there wasn't really, just got exposed. So no matter how small that first payout is, that first payout is the most important part. So I'm going to go to a live account, and my first goal is just get a payout. Because with FTMO, I can also get the refund of the fee that I paid, and I can reinvest that into another challenge or into, for example, stocks, which I like to invest in. And that way you get this cycle going where you can start scaling your capital. And my advice would be to not combine the accounts initially, unless you have this experience that you can already pull that off. But at first, you want to have a backup. So you don't need to pass a whole new challenge to now get to that funded stage again. So I'm going to keep you updated. I will show you right here when it is time to get to a payout as well. All right, perfect.